Investment opportunities during a recession. Have you ever wondered how to make money during a recession? These days, it is hard to turn a corner without bumping into predictions of an American recession, but we can't help it. Recessions are an inevitable element of the economic cycle, irrespective of how much people dislike them. In addition to causing a contraction in economic activity, recessions may also bring about market corrections, crashes, and bear markets. However, economic downturns can provide some of the most rewarding opportunities in the stock market. If you manage your investments well during a recession, you may experience lesser losses, which will leave you with more money and resources to reinvest at prices that are less expensive. The rise in inflation, the fall in the stock market, and the decline in gross domestic product or GDP have led analysts to question whether or not the United States is now experiencing a recession. While the judgment is still out on that topic, you may be wondering what are the steps you can take right now to put your investments in the best possible position to withstand unpredictable economic conditions. Welcome back, everybody, or if you are new here, welcome to Finance Bureau, your go-to handbook for anything finance and crypto related. I'm glad you can make it. In this video, I will walk you through everything that you need to know about strategies that investors may use to weather a global recession, as well as some of the greatest investment opportunities that are recession-proof, despite where the current economic climate is heading. Without further ado, let's dive right in. When the market is doing really well, it is easy to forget that anything that rises may eventually fall. However, economic downturns often follow cyclical patterns, which indicates that another economic downturn is on the horizon. It is smart to be equipped for its inevitable arrival, regardless of how close it is or how far in the future it is. In this manner, you may avoid joining the herd of panicked investors who are fleeing stocks and heading for cash. There is no such thing as an investment that is recession-proof, but certain sorts of stocks, ETFs, and tactics may assist your portfolio in successfully withstanding the effects of an economic recession. Instead, you will keep in mind that it is possible for stocks to do well even during a recession. All you need to do is choose the right ones. Perhaps you could hire a financial advisor that can assist you in developing an investment strategy that is able to become resistant to economic recessions. If you can't afford one right now, however, take your time learning and researching as much as you can about them. This channel encourages viewers to learn and research for themselves how to protect their savings, test new investment opportunities, and survive economic crises. But before we plunge in head first, let's talk about what a recession actually is. So what exactly is a recession? According to Investopedia, a recession is a significant, widespread, and prolonged downturn in economic activity. In the most technical sense, a recession refers to a period of declining GDP and is generally defined as a sustained decline for 2 or more consecutive quarters. Slow and poor economic growth are not the only causes of recessions. Job losses on a large scale, decreased employment opportunities, and greater need for government aid are typically corollaries. Think stimulus payments and increased unemployment benefits. You might be wondering, how does a recession affect me? Everyone is vulnerable in the midst of an economic recession. For example, during a recession, your chances of being laid off increases. Due to a growing number of individuals looking for employment, it becomes considerably more difficult to secure a job opening. Employees who are able to maintain their positions may experience wage and benefit reductions and find it extremely difficult to negotiate future pay increases. During a recession, the value of your investments in stocks, bonds, real estate, and other assets may decrease. To make matters worse, if you lose your job and are unable to keep up with your financial obligations, you might lose your house and other valuables. Business owners see fewer customers and may be compelled to shut their businesses. It is difficult to keep everyone alive during a recession, despite the government's best efforts to assist enterprises, such as the PPP during the coronavirus outbreak. What do you think so far? Please feel free to share your thoughts and discuss in the comment section below. But always remember to be nice to each other and respect the opinion of others. During a recession, when more people are struggling to make ends meet, lenders become more selective about who they provide loans to purchase things like homes, cars, and other consumer goods. To get a loan now compared to when the economy was doing well, you need a higher credit score or a bigger down payment. A recession may be terrifying regardless of how well you are prepared for it. The only silver lining is that economic downturns seldom endure forever. It's true that the Great Depression did finally end, and once it did, the United States saw possibly its finest era of economic expansion ever. So, is the US in a recession yet? As the Federal Reserve tumbles to confront growing inflation by increasing interest rates at the fastest pace in 28 years, with a 75 basis point hike scheduled last June 2022, experts are increasingly warning that a recession appears inevitable. However, it is important to note that a recession has not yet been declared to have begun in the United States. The National Bureau of Economic Research, or the NBER, an independent non-profit organization responsible for determining the start and end points of recessions in the United States, holds off on making a proclamation until adequate data is available. According to a standard definition of recession, 2 consecutive quarters of negative gross domestic product or GDP, the US entered a recession in the summer of 2022. The NBER, which is the body that defines business cycles in the United States, has a different point of view. According to the NBER's definition of recession, a major fall in economic activity that is distributed throughout the economy and that lasts more than a few months. We were not in a recession in the summer of 2022. Exceptions are allowed in the case of rare occurrences, such as the severe slowdown in economic activity that occurred in February 2020 and resulted in the extreme, if short-lived, COVID-19 recession. However, what would the next recession in the US look like if it were to take place? Even if the US economy does dip into recession, the good news is that if a recession were to occur now, it would probably be milder and have less of an impact on business profits than in the previous economic downturns. There will be no similarities to the Great Recession or dot-com bust of the late 90s. Both recessions were made worse off by significant economic disproportions. Dot-com bust was due to malinvestment in the technology sector, whereas the Great Recession was fueled by a massive housing bubble. These kinds of disparities do not seem to be present in modern society. A recession in 2023 would likely have less of an impact on the markets than recessions in the past. Is investing during a crisis or recession a good idea? The solution may not be simple to find out. As a result, it's likely that recurring past patterns won't provide much guidance for the future. The American economy went through 6 recessions between 1973 and 2009. It varied in length from less than a year to a year or more. Possibly the one consistency between all of the recessions was that they all ceased. However, recessions can create the best investment opportunities. Why do I say so? Well, any of the most successful businesses will see their earnings decline during economic downturns. A stock market collapse or correction is inevitable whenever there is even a hint of a recession in the air. There is, however, a benefit to investing during a recession. These economic downturns are terrifying to investors, but they may also provide excellent purchasing opportunities. Many financiers feared that 2008's huge recession would be the end of the world. However, this was a once-in-a-lifetime purchasing opportunity just before the market began a 10-year bull run. In a number of ways, investors may benefit greatly from a recession's selling prices. Typically, stocks with a high level of quality demand a higher price. Investing in a recession is the only time to acquire them with any form of safety net. Behavioral finance is a discipline that shows how irrational investors may be. They may make more errors when the market is volatile or in a bear market. The result is new possibilities. During economic downturns, the best companies also gain market when their competitors are cash-strapped. There are a variety of profitable investment opportunities available during a recession as opposed to those available after one has ended. Short selling is one strategy, while holding assets that are resistant to recession is another one. This may, at the absolute least, provide you additional purchasing power when a recession finally ends. Are you learning anything valuable so far? If yes, I would love to hear your thoughts. Let me know your insights and aha moments by leaving a comment below. Don't forget to also hit that like and subscribe button while you're at it. Moving on, now that we know that recessions can create investment opportunities, what are the next steps? How do you decide what to do? Many investors initially respond to a decline in the market by selling their holdings and getting out of the market immediately. Stocks are discounted during these times because the market expects higher future buyer returns. When asset prices fall, your potential future returns increase because great companies are set up to flourish in the next 10 to 20 years. Therefore, when prices are typically lower during a recession, you can expect greater returns. Although it may be tempting to avoid the stock market altogether during a recession, doing so might cause an individual to miss out on some great investing opportunities. Some businesses have a track record of success, even in poor economic situations. A strategy centered on counter-cyclical businesses with strong balance sheets in recession-proof industries might be a good option for investors. There are investment strategies that you can look out for if you can afford to invest during a recession. First, strong balance sheets. These businesses are better equipped to handle their existing debt and are less likely to suffer from the effects of tightened credit conditions. When investing during a recession, it's best to focus on firms with strong balance sheets or economically steady business models, regardless of the economic climate. Companies in this industry include utilities, consumer goods conglomerates, and defense stocks, for example. Investors who expect economic circumstances to worsen often increase their holdings in these sectors. Reviewing a company's financial records helps you evaluate whether or not the business has manageable levels of debt, stable cash flows, and is making a profit. Before deciding to make an investment, you need to take all of these things into consideration. The next one is recession-resistant industries. It may come as a surprise, but there are really sectors that do pretty well even through recessions. When customers cut down on more costly items or brands, or when they seek comfort and security from anxiety and uncertainty, many of these businesses observe a surge in demand for their products and services. The following industries, such as consumer staples, grocery stores, discount stores, firearm and ammunition makers, alcohol manufacturers, cosmetics, and funeral services. Stocks from these recession-proof sectors are popular among investors trying to hedge their bets during market downturns. These counter-cyclical stocks usually fare well during economic downturns because demand rises as incomes decrease or as economic uncertainty increases. Stock prices for counter-cyclical companies often go in the opposite direction of the economic trend. The value of such shares increases during economic downturns. They fall during an expansion. During the COVID-19 pandemic and subsequent recession, businesses in impacted sectors that entered the crisis with strong balance sheets had the edge over competitors who did not have such strong balance sheets. Companies with the financial flexibility to survive an extended disruption began to appear as excellent long-term investment opportunities. On the other hand, companies with otherwise good businesses but low liquidity were among the hardest hit stocks, and some didn't survive at all. Increased uncertainty and volatility in the investment markets are possible scenarios of a global crisis or economic recession. In a recession, how you invest can be just as important as what you invest in. In recessions, stocks tend to be rather volatile, as anyone who was involved in the market during the 2008-2009 financial crisis can tell you. The ups and downs of life might be frightening, yet out of the chaos comes opportunity. Should you avoid the potential dangers because of the period of crisis? Should you wait for the right time or rush in to reap the benefits? Let me know what you think in the comments. If you enjoyed this video, I'd also appreciate it if you hit that like button and subscribe to my YouTube channel to tune in for more financial and crypto content. See you on the next one. Thank you for watching.